Australia's stock market has just opened and it is set for a new record high this morning. It comes after economic growth picked up overnight and Apple shares jumped as it reported its latest profit. That was earlier this morning, of course. Our business editor, Ross Greenwood, is here to explain all. So, US economic growth is affecting our share market, but we don't have a lot of growth of our own, Ross.
We got precious little growth. Let's be honest. Australia's not growing, and yet most of the settings here are very similar to America. But so what we can show you is, first off, America's economic growth. And surprisingly, this is because consumers are actually going pretty well in America right now. So what you can see is that America's economic growth basically has prompted the Australian stock market today to go to a new all-time record high. So it's up by around 0.4%, 35 points. And really, it continues to basically hit these new record highs, largely off the back of expectations of lower interest rates. And also, you've got that. Now, if we go to economic growth, and what you can see is the US economic growth came in for the last year at 2.5%. In the year to September, Australia's economic growth was just 0.8%. But if you look at the other settings, it's interest rates, if you look at unemployment, if you look at inflation, all of those are very, very similar to where Australia's settings are. And so this goes into the whole narrative of whether Australia needs an interest rate cut or not. So this is a really important point to note, is that apart from that economic growth, which is about consumer confidence, here the consumers in the doldrums, they're not spending, they actually comprise around 50% of the Australian economy, and that's the reason why Australia's not growing, but America is at the same time.
So what about Apple? That will affect the US market tonight, our time?
Yeah, so that'll affect our market, but we can already see it. So you can see here the Dow Jones last night was again strong off the back of the economic numbers. But if we have a look at the Apple share price as we go through as well, what you'll see there is really the revenues were stronger. That was a record revenue for that quarter, which is $124.3 billion US dollars. Remember, that's just in a quarter. The net income, or its profit, if you like, $36.3 billion, that's up by 10%. And that also affected the share price. And if we go to the share price, this is in after hours trading. So during trading, during the day, they were down a touch. After hours, they're up by more than 3.5%. So this again says that the US tech sector has recovered very much from that washout in Nvidia shares earlier this week. Now it's starting to be higher.
So has Nvidia clawed back the entirety of its 18% loss?
Not yet, no.
Okay.
So, there's the issue there for Nvidia. Remember, the issue is that if you're Apple and you've got a giant data center and you're putting its GRU chips into it, if what DeepSeek proved to be true is that you need fewer of those GRU Nvidia chips to create the same outcome for artificial intelligence, then that quite clearly is a win for those who have to buy the chips, which is the tech companies like Microsoft and Apple, and it's a loss for those who make the chips, such as Nvidia. That's the key to the whole thing.
Right, okay. We'll keep an eye on that one.
That's right.
Ross, in Europe, they've cut rates for a fifth time?
Fifth straight time, in fact.
Wow.
Fifth month straight they've cut rates, and they're going to keep cutting. That's the other side of this. So, again, this goes back to Australia and interest rates. So, overnight, rates were cut by 0.25%, 2.75%. Its cash rate is right now. And if we go to, say, for example, looking at, I don't know, rates in there versus the odds of rate cuts, you can see here that in 2 weeks' time, just a little over 2 weeks' time, Australia is expected to cut interest rates. Broadly, that's what markets are saying. It's on. You can sense that the government's cheering that on as well. In America, though, because of what's taken place, that stronger economic growth and Trump's policies, particularly around tariffs, they're now saying inflation could take off again. So they've tempered back their suggestion of more rate cuts in America. In in Europe, you can see there the odds of a rate cut continue. So they reckon they could see another 3 or 4 rate cuts before the whole thing's over to try and re-stimulate that European economy, because their consumer, a bit like the Aussie consumer, well, they're in the doldrums right now.
Is there an argument to wait to April, or is that going to be a really difficult
There is a
one?
really important argument that still can be put, and that argument goes that we have not yet beaten inflation. And if all of a sudden you stimulate that consumer, you get them spending, guess what happens to prices? They start to rise again. And if that starts to happen, well, then the Reserve Bank might have to come back in and raise rates. And it doesn't want to do that because it would look bad for the Reserve Bank to suddenly reverse its position. And so the argument for holding off is basically take a little bit more time. But of course, you sense that's not quite what the government would want.
Michelle Bullock wouldn't have made up her mind yet. She meets with the board. Their 2-day meetings, of course. This will happen in mid-February. Can she make the political argument as well? Is there any data in this intervening 2 weeks that could really bolster her argument to wait until April Fool's Day?
There's no more data coming.
So it's just
you've
this.
seen the employment numbers. The next employment numbers don't come until after the decision from the Reserve Bank. And so as a result, they've got everything they're going to see, pretty much. So they're seeing what's happening in Europe. They can see what's happening in America. They can see the inflation data. They can see they're not going to see the economic growth data until after the decision. So pretty much they've got everything they need. Now, all of that would tend to say, including their change of narrative at their last meeting last year, that they should probably cut the rates. That seems to be the leaning, and that's where the markets do it. And the reason for that, I'll give you this, is in the last 2 quarters, inflation has just been 0.2% in each of those.
Right.
So if you
So it is the trend that Michelle Bullock said she wanted to see.
That's right. And so that's headline. So if you push that out over the next course of the next couple of quarters, then the inflation rate's sitting at just 1%. And there is the case to cut the interest rates. And that, I sense, might tip the Reserve Bank over the edge to cut the rates.
The board isn't impervious to political pressure as well. They'd be well aware it's an election year, and Anthony Albanese and Peter Dutton are talking about the cost of living as well. But just if we take a bit of a step back, Ross, given where we're at now, rates are starting to be cut, inflation over the last 2 quarters back in line with that headline target, jobs still high, wages are growing. Has this government done a pretty good job?
You can argue that. And that's exactly what I think that the government should argue. Rather than handing out more cost of living relief, they should be arguing that people have kept their jobs. So their cost of living crisis would be a disaster if they had not kept their jobs. That is, to me, their best argument going into the election, not necessarily handing out billions of dollars of money, which will be borrowed.
But is it despite them or because of them? That's the argument they've got to make in an election year, isn't it?
To be honest, inflation was always coming down.
Yeah.
Right? So always we were going to get to this point. Now, you could say that they've helped with a bit of cost of living relief here and there, but it comes at a cost, and the cost is the debt that the government racks up and the deficits that the government racks up into the long term. The fact is, if they could argue, we've been really responsible with the government, and we've kept people in jobs, and now, naturally, the inflation rate's coming down, that's a better and more fiscally responsible argument.
Yep.
But let's be honest, politicians like to spend billions of dollars, don't they?
Yes, they do. And many voters like them too as well. We'll see. It all comes down to the sell job, and I don't think the government's doing a very good sell job at the moment. Ross, I digress. We'll see you soon.